All right, so I'm talking to Fabi here today, and I just realized I don't even know her last name. But she'll probably tell me in
Lara,
a
it's
sec.
okay.
Okay, really? That's your last name?
Yes.
That's super easy. Okay, I can remember that. So I'm talking to Fabi Lara here today, and she started making videos on uranium in 2016, I believe, and she says she's been investing in uranium since 2014. So I don't know. It sounds like this is going to be an interesting conversation, but it is, of course, a conversation that's general and impersonal, impersonal in nature. It's a conversation between two individuals who just, I don't know, like losing money. That's our hobby. Just take it at that. We take big risks. We lose money. That's it. So I'll only take advice from this video if you would like to start losing money too. And yeah, that all said, Fabi, thank you for sitting down with me today.
Thank you very much. How are you?
I'm fine. Yeah. And I was thinking, why don't we this is the first time you're coming on. I do sort of have
Mhm.
an idea of who you are. I sort of gave you a short introduction there, but why don't we start by you telling me who are you and why do you think you're worth listening to?
Okay, good question. So who am I? I am somebody who's usually very early to things in general, whether it's my career, my investing, or most other trends. And the explanation to that is that I'm online a lot to the point where a psychologist would probably recommend me some therapy, to get off my phone, get off the computer, etc.
Mm.
But I've been able to use that in order to make better decisions. And so, yes, I publicly started to make videos very early on about uranium and about the stocks that I was investing in. And some people took notice of that because at the time, not many people were talking about investing in uranium and things of that nature. I'm a private investor. I only invest, lose, and make my own money. And I also am starting to help companies connect with retail investors. You're helping them just get access to each other, which means that companies in the near future, can't go into too much detail, but I'm working on something that's going to allow companies to showcase their companies better in a way that shows their qualitative points, not just the quantitative, because in mining, it's very difficult. You look at the quantitative, you look at the financials, they all look like they suck, right?
They
Because
do.
they're mining companies. And then you look like, what else do you look at? There's some other pointers that you must understand in mining, such as the team, what experience do they have, what other companies have they worked with before, and how were they able to either add value to shareholders or extract value from shareholders. So the qualitative aspects of it are some of the things that we're going to be showcasing soon-ish. I can't give any more detail than that, unfortunately, but it's the bringing together of those two sides. That's some of the stuff that I'm working on from a professional standpoint. And yeah, don't listen to me if you think you're going to get a hot stock pick, and I'm going to tell you when to buy and when to sell. And very, very bad at timing, very good at getting into things early, which means I'm wrong for a very long time. And it looks like a massive paper loss for a very long time. But so far, it has worked well in my favor because I have learned that I have a great ability to hold, the stocks that I believe in for a very long
Mm.
time. And so I'm able to see through the dips, but also, when they come out the other side. So
Mm. Yeah, that's a skill, really, holding your companies because it starts with a skill. It starts with knowing your company and stuff like that. So, is that the platform that you're working on? Is that something you're doing as an entrepreneurial venture, or are you working with a team under a company? Could you tell me more?
I am working as part of a team that's bringing
Mm.
this to market within the next few months. So
Okay, okay,
you'll
so
be hearing more about this soon, for sure.
okay. So I'll not push you too much on it.
That's all
I know
right.
you've been participating in some conversations lately, so I'm kind of guessing what it might be. You're not making any videos of your own though. I mean, I think your last video was like 3 years ago. So what's
It
up with
was a
that?
long time ago because so two reasons for that. I kind of ran out of ways to say buy uranium developers and wait, right?
Mm.
Which if people would have listened to back then, they would have made a lot of money mostly.
Yep.
And also, I didn't want my content to be too closely associated with particular companies, right? Because the issue is I was starting to pick up a few sponsorship deals. And it just so happened that because I had the audience, people would then associate me with the companies. And then if the companies did something wrong, it was my fault. And it wasn't my fault, technically speaking, but I didn't want to have my name and my brand associated with companies that I wouldn't have any control over or influence over, et cetera. So I think there are ways of doing this, but because I only had a small number of deals, it made my name too attached to those names. And so, you know, professionally, I went a different route and stopped making videos, you know, because I had said what I wanted to say. But who knows, maybe I'll start making videos again. I kind of miss it, to be completely honest. And Equity Guru, which is a platform, right, you know, that aims to inform young people and women about investment opportunities. They asked me to come back on. And so I'm like, yeah, okay, let's do something together. So now, you know, I've been participating with some of their content creation.
Cool. What do you mean young people and women? I mean, there you go.
It's
like you mean women are not people? Is that what you're trying? No, I'm just...
No, yeah. It's
just kidding.
Often the people who are not present at mining shows. That's basically it. So
that's very cool.
I think women are, it's not that women are underrepresented, but it's hard for women to understand the value of investing in the first place, but investing in high risk investments, it's not usually, you know, how women perceive investments. And so having a certain type of language and communication and I guess trying to flatten the learning curve that it takes for people to get into mining and things like that, it's important for, I think, for young people and for women who might not be looking at high risk investments. Like for guys, sorry, it's a thing. It's a biological thing. Guys will be naturally drawn, you know, towards more high risk investments, more all or nothing. Most gamblers are men. You know, it's not a coincidence. And women are like, I don't want to bet the farm.
Most people in prison are men. I think that says a lot about taking risks.
It does.
And taking stupid risks, I guess. Or not, let's not call them stupid risks. You know, everybody could end up in that position. Maybe risks that were not great risk rewards at times, because you're attracted to that reward part and you sort of start neglecting the risk. Absolutely. And I guess women are more analytical in nature. I don't know much about these things, so I'm just kind of guessing. I'm sort of, well,
we have to protect our offspring, right? Like we have for I don't know how many centuries. It's mostly stayed home, women working outside the home. Thank God I'm living in this time that, you know, women can have their own jobs and their own careers. But, you know, historically it's been, we stay home and we take care of the kids. And if you lose everything, we have no food. And that's a problem because the woman needs to stay back home and take care of the kids. And so I think biologically, you know, getting to that point takes a certain type of communication, and to young people as well. I mean, you know, I just went to a mining show, and still most of the people who were actively investing there were at least 60 years of age, you know, and we're going to need to inherit that, you know, like we're the next ones up.
Absolutely. You're right. I just went to my first ever mining show, actually. And it was men, and as they call them, booth beeps. I kind of hate that term. I think it's a little bit derogative, because some of these gals do a good job, but some of them are booth babes too. So I guess maybe some points, but anyways, what I was thinking about is that, you know, you're mostly right, but how do you attract women into a sector that is like dirty? There's a lot of bad things happening, a lot of shenanigans, and just like when I'm trying to talk to my wife about these things, and you know, pretty much the only two women I interact with are my mom and my wife. But so when I talk to them about mining and something like that, like they find it atrocious. Like they really hate it. They feel bad about the things that are going on only by hearing about them from me. So I guess something has to change fundamentally. Do you think that could happen?
I think It will happen with time and education. Um, Something that I think puts women off is, yes, the environmental impact of mining, but I don't think that's who we should be aiming for at first, right? I think we should think, okay, there are women who are actively investing. Why are they not investing in mining? And think of it as concentric circles, right? So you want to get the attention of the people who are closest to where you're standing right now in the center. So, okay, the ones who are investors, why aren't they investing in mining? And I think, the younger generation is less risk averse. So that's an idea. The other issue that mining companies have is the language around the technical aspects of mining, right? I've been investing in mining for many, many years. I'm still very, very untechnical, right? And I don't have a desire to learn the technical aspects of, the investment. And it shouldn't be a requirement, right? Because I try to disassociate the stock from the company. If you want to invest in the company, then I do believe that you will need a certain degree of, technical knowledge, or you're going to have to rely on other people to tell you, like you mentioned previously, about this technical knowledge, in order to vet projects. Is it a go, or is it not a go? The thing is, I play the stock, not the company. So I want to know, okay, does the stock have the structure that's necessary for the price to appreciate, right? Because my deal is to buy when the price is low, sell it when it's hopefully higher, right? That's the bet. And so my thinking is, does this company have a strong story? Do they have a strong team? And in mining, especially, it's very important, which is completely different to crypto. In crypto, you launch anything new with a recognizable name and it's an instant hit, or it used to be, before the bear market. But in mining specifically, it's good if you can associate a company or stock with something that's happened previously, right? I mean, the uranium story is basically that, right? Everybody's listening to Rick Rule saying, he had wild gains when he invested in Paladin at 10 cents, then 1 cent, then it went to $10. It's happened before. And so even though they have to give legal disclaimers saying that, future performance, past performance is no indication of future performance, that's what we feel as human beings, like, whoa, this has happened. Could it happen again?
Right.
And so is the story there? Are the people who have done it before, are they in a new company where they have the potential to do it again? If you see, somebody on the board of a new company and they've been involved with, I don't know, next gen fission, energy fuels, or one of those companies that are very easily recognizable, it's instant anchoring of quality of like, whoa, these guys must know what they're doing because they've done it before. And so there's some aspects that speak to the stock and the psychology and the structure of it that have nothing to do with the technical aspects that are quite profitable if you know yourself and if you understand the rules of the game. And some of these rules are exactly what I just said, the team and the potential, the story and how they tell it, how they communicate. And that's the game I play. I don't play the technical game. I play, the all the other stuff, the psychology game of the stock itself, and not just, will this company be profitable? Because some projects are good, geologically speaking, but they never become economic mines. Some mines become mines, some projects become mines, but they don't even become economic mines. So there's so many steps between a good idea, a good project, and an actual economic mine that my bet is not on that. My bet is on, the investor psychology process and the stock itself going up.
That's something that I've been thinking a lot about, is that who said that? It must have been Naval or something. Naval on Twitter, he's sort of like a big thinker in entrepreneurship. He said that if you're focusing on sales, that's because you don't know how to market. And if you're focusing on marketing, it's because you don't have a good enough product or something like that. And so, because I guess that what you're saying makes sense, but it might also be a slippery slope into a promotional company that has its stock going up. I don't like bashing anybody or any companies, but there are a couple of names in the uranium space that are complete promotional stories and never going to make a buck, or they're never really going to do anything, but their stocks are going to make a lot of people rich.
Yeah.
And so I that's what I've been thinking about. This what do companies focus on? Do they focus on selling? Do they focus on marketing, which are two different things, or do they focus on the project itself? Because if you don't have a good project, you could still sell it, but is that okay? That's sort of thing that I've been thinking about.
So I think what the companies should focus on is something very different to what investors should focus on. So I truly believe that the company should figure out what in the world they're trying to accomplish and stick to that. And so a measuring stick that I use is whenever I buy into a company, when I talk to them at shows or whatever interaction I have with them, what they say they're going to do in the next 3, 6, 12 months, do they do that? And it doesn't matter what it is, as long as they do it, or if they can't achieve that, that there's a very good reason for them not to. That's, I think, the easiest way of one of the ways, try to figure out if it's just a lifestyle promotional company or a real company, because sometimes you just don't know. Sometimes you need boots on the ground to go to the project and see that, that's not going to happen. Or sometimes the company has absolutely all the right ingredients and then they can't get the licensing they need, right? Statistically speaking, it's very, very difficult to build a mine. And so my bet is that I will not have an edge in choosing which one is going to become a mine, right? That's not the game I play, because that requires technical knowledge that I don't want to have, right? I want to spend my time doing other things. And so because I know that in order to actually become a mine, it's going to require a lot of knowledge and a lot of luck and things that are beyond my control, I just try to figure out, okay, is this management decent in the way that they do what they say they're going to do? And if they don't, then, I get out. So that's how I do it once I've bought into the stock. But the companies absolutely should be focused on, building their company. They need to be focused on what is the highest probability here that we're going to be able to create shareholder value, right? And that could be a successful drilling campaign. That could be sometimes doing absolutely nothing. During the bear market, the companies that were the big winners coming out of the bear market that we had in uranium, well, they were the companies that did nothing, that spent very little money and just sat on their resource. And then, all of a sudden you have very little shareholder dilution. You still have your assets, and then, market sentiment is changing, and then you're able to build your company. But it's tough, because how could you teach people or educate people on trying to, maximize their chances of finding the next mine if that requires things that are completely outside of your control? It's a very, very tough game. So yeah, when I find that the company is not doing the things they promised, that to me is a no-go. It's my exit.
Okay. That makes a lot of sense. That makes a lot. Now you're mentioning and you're reminding me of a question that I did want to ask you, is that you're mentioning the sort of the bad times in uranium starting off 2011. You say you were getting it in 2014.
2014.
So yeah, I assume your portfolio has been a roller coaster, but you're probably doing quite okay right now, right? Did you feel comfortable talking about your returns?
Yeah, I don't keep track of my uranium returns per se, and so it's all over the place. The only thing I actually track is just my general net worth. So that includes cash, business, and everything else in different currencies and whatever.
Yeah, that's what I do too.
I have assets in like 4 different countries, and so like it doesn't apply. But what I did, the right thing that I did, and this is so basic, anybody could have done this. This is why I tell people, listen to me or don't listen to me, but listen to people who have done this before. So in 2014, Rick Rule was going on all of these different shows. And Rick Rule, he will go on multiple shows. He's probably one of the hardest working guys I've ever seen in this industry. And he was telling people that in the bear market, in general, in mining, the bear market, the best thing that you could do, apart from obviously buying the top quality companies, they've become very apparent in the bear market because all the other guys fail, is to go for the companies that are doing absolutely nothing, that they have pounds in the ground or ounces in the ground that are not economic, the so-called optionality plays. They're not economic now, but they will when the price of the commodity comes back up. But that requires, a tight purse. You have to hold on to your hard-earned dollars. You can't be raising all the time because, you'll dilute yourself to death. And you need to be able to find those companies that have great teams that know what they're doing, but that are not spending money. And so I look for those companies and I put some money towards it, and they've become, massive successes. And so it's not hard from, a stock picking point of view, but it's difficult when you're looking at the chart and you're thinking you're getting a deal and the price comes down, right? And then the price comes lower and the price comes lower. And so it's way more of a psychological game than it is anything else. And I think step one, even before anything else, is knowing yourself. Like, what kind of investor are you? Are you a trader? Or are you a long-term investor? I actually tried short-term trading before anything else. So 2012, my first sort of stint in trying to invest was spread betting in the UK. As it's one of the very easy ways for beginners to start. And I was trading moving averages, like 2-week-ish, 3-week moving averages. And, I did okay for a little bit. And then I started to lose all the gains that I had. And I'm like, okay, no, psychologically, this doesn't make me feel good, because the market opens, I'm right in front of my computer, I'm sweating, I'm making decisions that I'm second guessing and third guessing, and I'm just going round and round in circles. And so I'm like, okay, this doesn't suit my psychology currently. What else can I do that is different to this, that might be more suited to me, right? And then I stumbled upon mining, and then I'm like, okay, these things are cyclical, so they kind of happen with a certain amount of repeatability, which is probably not a word, but here we go. And then the hard thing about mining is to be buying when everybody else is selling. And I'm like, I can go against the grain. As a little kid, I used to be the one who used to pick something that was different and, try to be a little bit, try to stand out a little bit. And so I'm like, I can go against the grain. That gels with me. Let's try to do that. And it's worked, but it's worked because I know that I can buy when the chart looks like absolutely dead. And so you have to know that first, I think.
It's a tough business too, though, because you could have been buying Enron when everybody was selling it, right? Yes. So you got to make sure that you're something that is cyclical, something that the thing that I've started calling it is that something that you have an outlook on. Okay, we're gonna have a problematic supply, but an undeniable demand in the future. Yes. Could you have said that on Enron? No, you cannot. You can never say something like that. Like, are we going to have an undeniable demand for iPhones? I don't know that. Are we going to have an undeniable demand for copper? 100%. Yes. Way around it. Are we going to have an undeniable demand for nickel? I don't know that. So, okay. So the copper story is more, is stronger. And that I guess gives you, you could go against the grain, but it's important to also know what you're doing, because buying something just for the sake of buying it because everybody else is selling it could be a slippery slope into something, to failure, basically.
Yeah, it's a part of the recipe, right? So you can't make a cake with just flour. You need the eggs, you need the milk, you need the sugar, you need the whatever else. So if just price action is your indicator, you're going to get into trouble, because most companies don't last that long from a long historical perspective in the stock market. However, if you have a company that has assets that are currently not being valued because of market conditions at their peak, but the company is successful at not spending the money and holding on to those assets, and the team has been through the cycle and have been able to, you know, have success before, that's a bet that I'm willing to make most of the time, right? Because that's a recipe that if you believe that the asset, the underlying asset itself is going to come back into vogue, then you just wait. And waiting for most investors is very difficult, and it has proven fairly easy for me. I can't tell you why. It's just my rhythm and my tempo. I'm willing to wait a year, 2 years, 3 years, however long it takes for a story to play out.
Might be an age thing, you know, and yeah, you look very young, but if it could be an age thing, because I've got the same thing. I don't care, and I've been in the red for a while now. I'm aggressive, double over 30% in the red is what my portfolio is in, because when I first started buying these things, they were cheap. I could even find some comments of mine back on your videos from like 4 years ago that you were talking about. I was like, okay, now is really time for uranium and stuff like that. And sure, I was buying some, but the amount of money that I had back then was nothing compared to what I have been able to save throughout the last couple of years. Yeah. And so I've been averaging up aggressively, and that's what it's come down to. What was the first company that you ever bought, like uranium company?
It was UEC, okay. Uranium Energy Corp. Yeah.
You still got that?
UEC. No, I don't hold it anymore. I found other companies that suited me better. So one company that obviously I like to talk about because it was my biggest win was enCore Energy. And enCore Energy it had all the ingredients that I just mentioned for the bear market, right? And the difference between enCore Energy and UEC at the time was that enCore wasn't really spending much money. They weren't raising all the time, right? And so I looked at it, and people weren't talking about it. They weren't promoting it, which sometimes can be good and can be bad depending on where we are in the cycle. But they weren't going to the market all the time, right? And I'm like, this is good. You know, their share count's still decent, and they only raise every now and again. I'm going to go with this company instead, because you know the management of the company is actually involved in other companies, and they draw their salaries from there, etc. I think that this is a horse that I can bet on. And you know, I started buying it at 6.5 cents, and so today it's like $1.23. It's reached like $2 or something like that. So yeah, It's been a massive win.
Okay, so you still, because you've got Paul Goranson on your side now with enCore. I'm talking to him this week, by the way. Nice. It's a coincidence. Yeah, he's amazing. He's a great guy. But so do you still hold most of your companies that you used to? Because you had a small portfolio back, and it was like 5-6 companies, I think.
Yeah. Yeah, I don't hold a ton of companies, but I can talk about my largest holdings. So definitely enCore is still one of my largest holdings from that time. You can see that they have moved towards production by diversifying and by buying into more advanced projects as well. I really like the fact that they went out and merged with Azarga, which is a company that I used to own. So, you know, it suited very well in how they're American focused. They know ISR very well. And, you know, you could see that the team was growing towards where they wanted to go. And that's very important. Sometimes you go to a company's page and you check out their team, and it's like, okay, so if you're a developer, who are you bringing on that's already built a mine? Who do you have on that has operated a mine? And so you're seeing, enCore build that team. And as I could see that through time, then I knew that, people were really, the enCore team were really serious about actually developing the projects that they had. And so that's one little tip as well. If you're within a certain stage of, the company's lifetime, do you have the people that will take you to the next level? I think that's also an important question to ask when you're looking at the team.
Of course. I think it is. How do you approach, do you approach the uranium investment thesis differently now than you used to? Like, do you still do like a portfolio? Like, do you want to diversify between producers and developers, or are you still mostly focused on developers?
I'm mostly focused on developers. However, I every now and again I do throw a little bit of cash towards exploration companies. I often lose money in exploration companies, so I try not to. But every now and again, there's a private placement that comes along that I think is interesting, and so I take the risk. But yeah, like Global Atomic is another company that, a developer that I made a bet on not too long ago. I think I've only held Global for maybe 2 years. I can't remember when I bought it. But yeah, I have maybe five uranium holdings. It's pretty concentrated.
Hmm. Okay. What about if you were just starting out right now and you had
Okay.
like, what would you do? Would you still focus on the same type of companies? Because, they're not the cheapest anymore because the market has found out that value. You mentioned Global Atomic, you mentioned all these other companies they're much higher than all the, shit codes that I'm in. So what if you were just starting out right now?
Okay, so if I were starting out right now, I'd probably mostly stick to the companies that I own when it comes to the developers. I don't think I would risk the explorers unless they had at least one good hit, right?
Hmm.
And then you have to ask yourself, okay, they've made a discovery. And then you have to ask maybe somebody with a little bit more technical knowledge or the company themselves to ask, what does that mean? Because this is where the technical gets really messy. Sometimes you look at a news release and there's a nice intersection of X% uranium, whatever. Then you
Hmm.
have to ask yourself, okay, how does that fit into their thesis? Does it make it stronger? Is it just, a strike of luck? Is it shallow enough that they're going to be able to mine it? Is it in a location where it still makes sense for them to continue to pursue this? And so sometimes, a company will find uranium and, they come out with parts per million in which you have to go back, okay, what does that mean in percentage terms compared to the Athabasca Basin, which is usually, percentages because it's so rich. But then you have to ask yourself, okay, this looks like it's very poor compared to the Athabasca Basin. But what most people don't realize is that in the Athabasca Basin, sometimes you just cannot mine the stuff out of the ground because it's so deep and there's an expectation that the mine is going to flood because there's a natural basin. And some of the stuff that gets found out there never gets mined. And then you have to have that sort of knowledge. And sometimes I even ask in the company, okay, what does that mean? Is there any other project around the area of that grade that is being mined currently? That's one of my number one questions is, okay, what you found here, does this just take you one step closer to what you're looking to find? Or is it solidifying the fact that this that you have in your hand looks a little bit like this other current project that is being mined today, right? And
Hmm.
so that's something that people don't realize, because if you look at USA projects, it's like, this is nothing, right?
Hmm.
Like, how can you mine this economically? When you think about the Athabasca, sometimes the grade will fool you because it looks amazing, but it's so deep. Oh, it's
Hmm.
so, and the engineering of it is so complicated that it's not worth it. So but then you have to ask yourself, okay, are you playing the company or are you playing the stock? Because if you get a really nice grade, people won't have the technical knowledge to try to fit it in and try to figure out the economics of it. So they're just going to buy the stock and it's going to pump. And so you have to come back to, okay, how long am I going to play this for? Is it about the company? Is it about the stock? And you have to be asking yourself those questions a lot more than trying to rely on what you think the market's going to do.
Hmm. Yeah. Yeah. I think one thing that makes sense right now more so than maybe before, because a lot of these companies have, raised cash, they've put money into the ground, they know a little bit more about their projects. Some of them, the exploration companies, some of them have already hit something. So it makes more sense now, though some of them are being discounted as exploration companies while the developers are still sort of keeping a higher valuation. So that's really interesting to know right now, I
And I
think.
mean, it doesn't hurt to own the boring stuff, like own
Mm,
spot. You know, if you believe the price of uranium is going up, then why not buy uranium, right? Buy chemical, buy Kazatomprom if you can.
mm,
I don't see a world where Kazatomprom doesn't make money, like lots of it, because they make the stuff very cheap. And if
yeah.
they make it cheap now, can you imagine as the price corrects?
Mm,
Um, Obviously, there are difficult political issues surrounding Kazakhstan and Russia, and how are things going to play out. But then again, it goes back to the very basics of investing. Never put all your eggs in one basket. Make
mm,
sure that you're spread out. You're not just betting the farm on one name,
right.
especially if it's exploration. Please don't do
Mm,
this to yourself and your family. And go for the safer stuff. If you're a beginner, don't try to get cute with it. And if you're going to go for exploration, make sure that you either have some sort of counsel to tell you what that means, or that you play with, baby money.
mm. How do you do your buying, by the way? Like, did you wait for dips, or do you just randomly buy whenever you've got the cash?
No, I waited for dips, and it was usually prolonged dips. So I
Mm,
am not the type to keep adding to a position as it's going up. I just don't like doing it, and I would rather wait for a new company to become public, then wait for that excitement to wear off of, we're the new kids on the block, and then have the price drop and stay for a little while. And then I'll look into buying it. So
mm,
obviously it depends on what they have. Like I say, I always like developers before I look at explorers. But if the companies that I bought, for instance, enCore Energy has been going up and up and up and up and up. I only ever added to my position once, right? So I bought, at 6.5 cents, and then I participated in a private placement, I think at 15 cents. It was something like that. Yeah, 15 cents with 22 cents warrants. And after that, I haven't bought more. And I could have
mm.
bought more, and I would have made a lot of money buying more. But for me personally, the chart needs to look bad to horrendous for me to want to get in. If the
Okay.
chart looks good, I don't want to get in.
Well, that's something that I sort of also used to have as a cheapskate. Like, for example, I buy my clothes
Mm-hmm.
secondhand. This shirt also I bought it secondhand. It's just because
You want
I
the
don't like,
sale.
I don't exactly. I love the sale. I'm more attracted to stuff that are on sale, and I know that sometimes businesses would sort of try and lock you that way. But like on the stock market as well, I was only attracted to stuff that in my portfolio that had dropped. But then I was introduced to the strength of the uranium thesis. And as I had more cash coming in, I was like, okay, well, none of these are dropping to levels that they were like in 2018, unless there's something very, very bad happening.
Mm-hmm.
And that's when I started thinking, like, maybe I should be adding up whenever I have the cash, or whenever there's some sort of a dip. Like, I don't buy on days that are 15+% to the upside.
Yeah.
Okay. But is that responsible, though? I mean, how do you know if a dip is a dip and not a crash? Or how do you know if a spike is a spike and not like the start of the bull market, like the start of the next leg up? Because if you say like, okay, we had a 10% spike today, I'm not buying because this is going to be the next leg to the bull market and we're going to go much higher. I mean, if you say that this was just a spike, so I'm not buying because it's going to retract and I'm going to buy
Mm-hmm.
then lower. But what if this was the next leg to the bull market and you end up missing out? So is that a responsible
This
strategy?
question has probably been bugging investors since the beginning of time, right?
Yeah.
There is no right answer to it. I think the only answer is, what is the stuff, like, how can I win this game with the things that I am willing to do, right? So I
Mm,
know that I won't buy as most of the time as the price is going up. So what happens is when, the price of a lot of my investments like uranium are going up or down or whatever, then I have to look at the thesis. Okay, is the thesis still strong? Do I still believe in it? Can I attach a number to the thesis, which is very important? If you can't attach a number, just a story, then you're missing something. And, you know, sometimes the secondary market will actually teach you a lesson because you don't have your numbers right, or your numbers are not reliable. Maybe you don't have any numbers at all. You just believe in a story, and that's very dangerous. And so you have to ask yourself, okay, so is this company cheap? Is this stock cheap to what they already have? Not to what they will have or to what I believe they will have, but what do they already have, right? And so, for instance, I look at Global Atomic and I look at the project that they have, the main project that they have, and I look at the money that's coming in right now through their zinc property. And I ask myself, okay, market cap versus actual assets in the ground, is it still cheap? And if it's still cheap, then technically speaking, price action should be completely secondary or almost irrelevant to that, right? In that case, then yes, I would buy more. But I need to be able to see that the assets that they have right now are worth more by quite a bit than the market cap. I like to think in threes. And so if what they have now is 3 times the price of their current market cap, then I'm willing to invest in it, even if the chart doesn't look like it's, you know, complete and utter crap.
Okay. And that probably results in not many companies to invest in, right? Does that mean that you're keeping your exposure to uranium low, or are you just going heavy on every one of those? Like, what is it? What percentage of your whole portfolio is uranium right now?
It's probably 90%. Yeah.
Oh, wow.
Yeah.
Is that liquid portfolio, like stock market?
Just the stock portfolio. Yeah.
Okay.
Just the stock portfolio. But yeah, it means I only hold a few names more heavily because, you know, once the bull market starts, then I have to look at maybe new options, but I have to believe that it's cheap current to what they currently have. You know, that's the question I keep asking myself. Not
right.
If you go down the road of it's cheap based on what I think they might achieve, then you're either hoping for it or you have some technical knowledge that nobody else possesses, right? And so I like the cheap stuff.
Right.
Can't blame a woman for going for the sales.
No, it's true. It's true. And you've mentioned a couple of the names that you already have, but what if you had to keep only 3 stocks? And it's been a while since I've asked this question. Actually, I called the gun to your head scenario. Like you had to, there's a gun to your head, and you have to sell all of your stocks and only keep 3. First of all, would you keep only 3 uranium companies? Because you said that you have some other stuff in there. And if it's uranium companies, which 3 companies are you keeping?
Interesting question. I would keep enCore Energy, Global Atomic, and the third one, I won't talk about it yet because it's not public.
Okay.
But it's an interesting company. You'll hear about it for sure, but it's not public yet. So I'm going to keep that under wraps. So secret company, people are going to need to follow me. This is my sales pitch. You're going to need to follow me if you want my third pick. But for the other 2, enCore Energy and Global Atomic. So I'm a hardcore developer, speculator / investor.
Yeah, it seems to me like I, by the way, own shares of both of those companies, disclaimer, honest confession, but it seems to me like you're placing your money. They're small positions for me, though, because I'm going for the crapshoots. But it seems to me like you're placing your money with high quality companies, high quality names within the companies, too. And as I mentioned, I'm talking to Paul Goranson this week as well. I've spoken to Stephen Roman. He's nice. Yeah, he comes from a whole line of, like, his dad started Denison. So, you know,
I didn't know that
as well.
Wow.
You didn't know that?
No, I did not.
Stephen Roman used to work for Denison as well, I believe. And so he moved on from there to sort of do his own thing. And he's sort of the innovator in the family, apparently, is what he told me, because he went to Africa in a time where it was kind of shocking to do it, especially where he went. And it's been paying off. So,
for sure. That's awesome. That's good stuff.
Yeah. What is, we were talking, you're talking about holding just a small number of companies, but do you think that number will grow towards the later part of the bull market? Because I mean, you're keeping a spreadsheet of public companies. I saw that's pretty cool. There's about 100 public uranium companies right now, let's call it, but that number is likely going to grow with the bull market. So what do you think? Are you going to be adding new names, or do you think you'll mostly be increasing your position in the existing ones?
I expect to be adding a few names. There are a couple of companies that have my eye or have my attention right now that I need to do a little bit more due diligence on because they seem interesting. And yes, I think the idea is that new companies are going to start popping up that I'm going to believe that they're interesting. And I'm going to, make new bets on new companies. Or who knows, maybe I take a second look at companies that, have been around the block a couple of times. And if they appear cheap, if some sort of breakthrough happens, or, they're able to, I guess, advance their production. And I keep talking about developers all the time and talking about, can they advance production? Like, we don't really know, but the story about the 10 cents that became 1 cent, that became $10 in Paladin Energy back in, I think, 2007 in the last bull market. There was another company that actually went up a little bit higher, and that was Laramide. And so Paladin became a mine. I don't think Laramide had a mine.
No, Laramide's still a thing. They're still trying to
Laramide,
I believe.
Laramide still exists as a company. It definitely does. Now, I don't know if they actually went into production and sold off, their mine, or if they just couldn't come into production. That's my guess, is that they didn't go into production. But yeah, the gains were higher, but it was the story of, we're going to go into production. That's what made Paladin and actually going into production. That's what made them go from 1 cent to $10. Yeah. So, and I personally asked Rick Rule about it, did it have something to do with the fact that they were coming into production? He said, absolutely. Absolutely.
Of course, yes. They went from zero to, as cliche as that may sound, they went from 0 to 1. They went from nothing to something.
Yeah.
Most of the companies are going like from A to like XYZ or whatever, but it's still on the same spectrum. So Laramide they still market themselves as, I believe, I've never spoken to them, I don't own them, but they market themselves as a development company still. Mm-hmm. So that's the whole thing about Paladin that not many companies did last time. So but then your strategy is interesting, because the prices in the companies that you own right now are much higher than what you were buying them at. Mm-hmm. And you told me you don't like adding up. So you'd probably not be adding to those, but you'd have to be on the lookout for new names. And as the bull market progresses, the new names that are going to be cheaper are going to be low quality, because we're going off the quality scale, right? So do you think you're going to have to compromise quality for price?
That's an excellent question. I don't know. The reason why I don't know is because I'm playing the developing game. You have to ask yourself, okay, are there any jurisdictions around the world where the licensing / development of a uranium mine can be faster than it used to be? And the jury's still out on that, because uranium is coming on vogue. Like, there's a nuclear renaissance happening around us right now as we speak. And we don't know how quickly some companies are going to be able to actually put their assets into production. One big question mark is, are things going to be sped up in the USA? We don't know. There are too many unanswered political questions regarding that. The other thing is, if you have, very, very rich, deep project in the Athabasca Basin, it might be the best mine in the world. How quickly can you get it into production? And how quickly can you even drill it out? Because you can't just drill any time of the year in the Athabasca Basin, right? It's like frozen and slushy half the time. And so the other question is, okay, so you could go down that route, but what about African companies? Because they can get licensing much, much more quickly than most anywhere else around the world. Are there interesting projects there that will allow you to get into production like Paladin did? Sorry, much faster than you would otherwise. And so licensing, I think, is going to be a massive theme, in the next couple of years, and the speed of implementation, financing, and the other thing that's important to highlight as well is that I used to think that the uranium thesis was good. It was people betting on a squeeze, on a fast squeeze that was going to happen again because fuel buyers would be very content and comfortable with their positions, and something could disrupt the market that would catch them off guard, and that there would be a squeeze and it would be fairly short-lived like it was last time. I don't believe in that anymore because the demand growth of nuclear has been insane. It has been a shift in narrative about nuclear for the last 2 years in a way that I've never seen before. And so I'm thinking that this is a longer term bull market because it's a longer term shift in humans realizing that we need more energy, period. And we need more nuclear, we need more solar, we need more wind, we need more of absolutely everything. Therefore, let's not idle nuclear power plants in California, fingers crossed in Germany and the Netherlands. And, those news are coming out this week. And so I think it's a much longer bull market. And because of that, then maybe we'll see next gen get built up and fission get built up within this bull market. Fingers crossed we don't get a Fukushima 2.0 and we actually see a very long bull market and people accepting nuclear energy and real demand growing over time in a way that's sustainable. The price becomes sustainable for a lot of these mines to come online. That would be quite different to how I started, with this thesis.
Yeah, I believe it will. I'm still yet to learn if that's possible in uranium. I think a lot of us are. I'd be happy if that was possible. But does that mean that you think that the later stage of this bull market will be bigger than the part that you've already participated in terms of gains? Like, do you think that's possible?
Yes, I think that's possible because I believe in the basics of human psychology and our undeniable desire to create bubbles everywhere we go. So uranium.
That's a good point that you bring up. I'm sorry for interrupting you here, but maybe that's a point where we could bring in the chart of what do they call it? The psychology of a market bubble or the psychology of a market cycle, something along those lines. If we look at that chart right now and apply that to uranium, where do you think we might be at right now?
I think we have gone through that whole cycle.
When? Do you mean since you started investing?
Since I started, yes. I think since I started, I have seen signs of every single thing there, of the greed, of the fear, of the excitement, of the new paradigm, etc. I think we've lived through that. But I also see that whole cycle as a ton of mini cycles, right? And so I think we've gone through one of those, but that's not the full cycle. And that we're in that first little bump, right? First or maybe second little bump on the way up. And the reason why I now believe this is because everything that you take as a comparison from the last bull market has yet to develop. So spot price or term price, people were able to sign $100+ per pound contracts back in the old, in the past bull market. That was in 2007. So today, if you look at $100, that's probably what, 140 nowadays, maybe more. And then, okay, so price hasn't reached it. The amount of companies that are uranium companies or that have uranium projects, is today about 100, a little bit less actually. It used to be 500 back in 2007. The spot price reached 140. And right now we're sitting at like just under 50. And so there's nothing that has surpassed the previous bull market, but with a much stronger fundamental thesis. And I believe that until we reach the numbers that we reached in the past, then I'm still bullish uranium. Until we start hitting those numbers, then I don't think we can start talking about, bubbles. But I do believe that we will end up in a bubble.
Like everything.
That'd
be cool.
And for the bubble, like it's the little bit at the end, that's the spike that, if you can get that, then you make a lot more gains a lot more quickly than all the gains that I've made so far.
That reminds me of that one meme by Uranium Corgi, like where you have all these moves and you have one huge green candle to the upside.
That is the story of uranium. Like even, if you try to trade it, I mean, God bless you, because it's kind of crazy and it's very real. I tried not to trade in and out of anything because I would completely butcher it. I
always thought I would and I could, and I just don't have the guts to do it. I just don't. I cannot bring myself over to it. Maybe it has to do with the fact that I'm constantly doing other stuff and I'm not really behind a computer. I guess you could do it. You could have made a lot of money. I think Larry McDonald from the Bear Traps report, he's called a lot of the intermediate term bottoms and tops, and he's recently done well. He's making more money than all of us probably. So
for sure, But if I were to do what he's doing, I would lose a lot more money than I'm losing.
Exactly.
Because it comes back to what's my psychology? Can I do this? Am I willing to put in the work? Am I willing to? For uranium and for all of mining, I'm sorry. Like if you're going to invest in it or trade it, if you're trading it, you have to be in front of your computer, like every single market close and open, and throughout the day because of news that comes out, in nuclear right in the middle of the day, and you have no idea what's going on until everything is up double digits.
That's what happened last Friday, right?
Yeah. If you're not willing to do that, then like you're not going to be able to trade well. And I don't want to do that. Like I live by the beach. I have a chill lifestyle, and I don't want to be stuck to my computer trying to maximize the gains that I am very certain I will have because I'm catching the meat of the move instead of every single dip and things like that.
If you look throughout my window, you'd see that I live by the beach as well, because there's a pothole that's been filling up with rain for the last couple of days. So it looks like a beach. What if we were to make this more specific and talk risk reward here? Like from this point on, how much do you think, let's use the URNM ETF, the index. How much do you think it could drop and how much do you think it could go up? Not sort of theoretical risk return here.
So I don't know how much it's dropped by already. Is it down like 30, 40% from the highs? I haven't looked at it recently.
No, but I think so.
It's not uncommon to see 50+% drops in resource markets. And so anything around 50-ish% total top to bottom doesn't really faze me. I think that's sort of, congratulations, you're investing in some of the highest risk, highest reward industries in the world. But if you can stomach it and if you can add to your position, as long as you still believe in the thesis, then guess what? It might pay off.
Right. And the cool thing is that if we were to do another 50% drop from here without the thesis being changed, the upside changes much more and the downside sort of gets more limited. So actually, if the fundamentals remain as strong, the more we drop, the better the risk reward gets. So that's the good thing in being in this type of an investment, I guess.
I'm still kicking myself for not buying into the dip in 2020. I just wasn't looking at stocks whatsoever. And I should have bought with both hands, and I had the cash. I must have been sleeping throughout that whole day, but that would have been a beautiful, beautiful entry point.
what do you think would cause the next leg up? I see, you're talking about decoupling a lot on Twitter, but I don't see much of it happening right now. For right now, it's a deleveraging event. People get rid of whatever they could, and for whatever price they could get from the buyers. So,
Yeah.
well, I guess a two-part question maybe. Are we going to see decoupling during this cycle? And what do you think will cause it?
I think we could see decoupling. I believe that we will, because of the structure of the market right now, meaning supply demand imbalance, right? The stuff that really moves it. So you have a situation where there is political uncertainty around countries that are either possess high amounts of uranium, whether it's the actual U3O8 or processed uranium and processing facilities for uranium, or they have a large amount of influence over other countries that produce uranium. That is one thing that could really blow up. The other thing is that right now there is a supply and demand imbalance. We know that. The other thing is the secondary market, and I'm no expert in the secondary market whatsoever, but it used to be that with the bear market, the secondary market, I guess, expanded the bear market by making the supply of enriched material more plentiful, and that lever works both ways. And right now we're at a point where that lever is turning back. Question is, as the lever is turning back, what is going to change for the price to all of a sudden drop, for us as a human race to not need as much uranium to fuel our nuclear plants going forward? Like, I can't picture many things that, bear a total destruction of many countries. What will it take for humans to not need as much energy as we need today? And I mean, if you take the whole market cap of all uranium companies, it's less than Hershey, the chocolate company, right? Like, that's not very much at all. And so as energy in general, that's been underinvested for the better part of, a decade, becomes an investment thesis, I think then uranium will naturally become one of the options within that sort of investment theme that I think people are going to be looking at, because, tech is pretty much dead. Crypto is dead. People are starting to look at, energy, because we're underinvested. The Western world has underinvested in energy, but the consumption of energy has gone up. We need more electric stuff every single day. I look outside my window, and it used to be that teenagers walked, right? And every now and again, they would take the bus in my town. And now they don't walk and they don't take the bus. They have their own electric scooters and their, electric motorbikes. And they're super annoying, exactly. But they all have it. They're charging these things somehow, right? And when they're not on it, they're on their phones. And when they're on their phones, they're in front of a computer, or they're doing something else. That's not going to go away. And because that's not going to go away, I cannot imagine the price of nuclear fuel to stay low for very long.
Right. Well, I guess what could happen is that where you don't need there's a guy on Twitter, he's called Chapman. He calls himself the atomic CPA. I spoke to him a couple of times, and what he tells me it's not really going wrong, but the thing that could cause us to need less uranium is innovation. And so like something like Silex's technology, where you can do severe underfeeding and still get to nuclear fuel, or innovation in reactors that need far less, or work on depleted uranium. So something like that. But the thing to understand, I guess, about that is that he always reminds me of is that that's way up in the future. Like, that's not happening in the next 3, 4, 5 years. In the next 3, 4, 5 years, we have no way around it. Uranium is going to have to come out of the ground, and it's going to have to get sold at prices that incentivize production, which with inflation, they've gone way higher than that $65 that people go on about.
Yeah, for sure. And it's like, people ask me about thorium. And yes, okay, we can make beautiful nuclear energy out of thorium. That's not a problem. The problem is there's something in that process that is not commercially viable, because if it were commercially viable, then you would see India coming out and saying, hey, we're building new thorium power plants. And they're not. What they're saying is we're building nuclear power plants that are fed with uranium. And so if the country that's the most advanced in thorium research is not going down that road, and even if they were right now, if they were saying that they were going to start producing now, how long does that take until it spreads commercially? You're talking decades, it's not years. And so whether thorium will be the favored nuclear fuel going forward, heck, by the time that happens, we'll probably be investing in thorium and not in uranium, but it's not now. It won't be in the next 3-5 years.
When do you think you would sell then? Like, what do you want to see in this bull market that you say, okay, there is no more reasons to hold these stocks, I'm selling?
I think when I see prices going up considerably higher than the last bull market, that's one thing.
What is considerably higher? Is that a percentage thing? Is that inflation adjusted?
I guess inflation adjusted is the minimum that I'm willing to look at. But then it's so let's take away the considerably higher, just higher. Okay. Just higher than last time. Good enough as a basis. But then not looking at the price, I'm going to look at market sentiment, because that's really what I look at sometimes even more than the price. So market sentiment, when we start seeing more and more companies pop up every week, a uranium company. When I see companies put uranium in their name and go up 20% in a day, and people talking about how this time it's different, then I'm going to be selling, right? So there are the different ingredients to market sentiment that I look at, those being the main ones. When there is this sort of, and this just happened with crypto. So, and I was active in crypto when that happened. People were saying, oh no, Bitcoin is going to go to 100,000. It's inevitable. And how Ethereum was going to go to 20,000, right? And more people believing in it. And there's kind of a cult feel to the crazy estimates, right? So when the craziness becomes the accepted, that's a big red flag, because it's when humans believe that this time it's different that you should start looking at exiting, because it often isn't.
But it's market psychology. It's not like not time bound for you.
No, it's not at all.
So you wouldn't call like
market psychology.
Let's say you look at your uranium stocks in like 10 years and they haven't moved much from here. You wouldn't call that a failed thesis, or what do you think?
It depends. I'd have to go back to how much I made percentage terms, and does that fit within my goals, right? Like my total wealth goals are 13% net total net worth every single year. If I hit that, then guess what? Then that means I made it. And with enCore Energy alone, it's been like something bagger, 20 bagger, something like that. And so it would take a long time for me to go back to my plan.
Right.
That's why I can wait for the thesis to play out. But yeah, like in 10 years from now, if the price is stuck where it is, then something's wrong, because it's either failed and it's lower, right? Or it's much higher. Like I can't fathom the price being the same, because if it stays the same, people are going to give up, and then it's going to go lower. And so
exactly. Yeah, exactly. I don't know that I'm going to give, I guess 10 years is a very long period though. We've been at this for a couple of years now, and it's kind of getting annoying, but not to the point where we've had a lot of fundamental developments, right?
Yes.
That have just improved the thesis. So that's why it's not getting really annoying or boring or whatever people call it. So that's why I guess I'm able to hold. But what do you think comes next? Maybe for you after the uranium thesis? Are you going to stay speculating? Do you hope to be out of the speculation market and do business, or what do you think you're going to do?
I will always probably forever be in mining. I just love it. It's a crazy business, very high risk, but very high reward. And, you know, there are a bunch of old guys that are unfortunately dying off, and young people need to come into, you know, the sector and make something of it and hopefully build, you know, good quality companies that can deliver shareholder value. And so I think I'll be more and more involved in mining, maybe looking for a different asset. I always hope and pray that the assets go up, not in tandem, you know, just separate from each other so that I can hop from one to the other. It doesn't usually happen. Sometimes you have just a bulk in commodities and they all go up at the same time. I hope that I can hop off, you know, with nice enough gains, and I can, I guess, take some time off and not try to invest in the next thing, because if you try to time it perfectly, then you get caught right in the what's hot, what's the next thing.
But now you want to have the optionality to wait for it to come along, because when it comes along naturally, it's a much stronger thing. You're not pushing, you're not looking for it. That makes sense.
So hopefully I am wise enough when it happens to stay off it for a little bit, look at the general market, look at the equities, look at tech, look at crypto, and then reassess. Because it's very easy after a big win for people to get really overconfident and just go all into something that's not the right thing. And then they lose everything that they've made.
That's probably true for many other things in life too. Get to find out myself though.
The whole game of investing is you constantly fighting your nature. I truly believe in that. So it's in my nature to do certain things that do hurt me, you know, profit wise. And so you have to play against it in order to maximize your gains. So like somebody did a study where they found out that the people who had made the highest amount of gains throughout a certain period of time were the people who either lost access to their accounts or they died or something of the kind. Right? They couldn't sell, they couldn't move their stocks, and so that's how they won. And yeah, got to know the game you're playing and play it well. Don't try to play more than one game at once, because it gets messy.
It definitely does. That's something that I'm definitely prone to do myself. It's sort of my greediness that I have inherent to me. So yeah. All right, well, Fabi, I've kept you long enough, and I'm sort of running out of questions here, I guess.
That's all right.
Oh, because if we go into another topic, we're probably going to be doing this for another 2 hours. So I was thinking, let's wrap it up here. Is there something that you wanted to talk about, but I failed to bring up?
No, I think just going back to, you know, how do you win in this market? Know yourself, first and foremost. Secondly, try to understand the thesis and attach numbers to it. This is something that, you know, I've started to preach a lot, because I think I made a mistake when I first started investing in silver back in 2010 and 2011, which was the very top of the market. I didn't have a number attached to the supply and demand dynamics. And so I lost because I only bought the narrative. I didn't have any numbers attached to it. So if you don't have the numbers attached to it, you'll believe anything that somebody with a nice suit will tell you. And that is a surefire way to lose money.
Yeah. But I don't think we can do better than that to close off the conversation. So thank you for investing your time with me.
Thank you.